Every AI application currently in use is entirely limited by the availability of physical hardware. While software can scale to millions of users instantly, the silicon chips required to process that data are finite and incredibly difficult to produce. This chart shows the revenue growth TSMC has captured as a result of that hardware demand. In the second quarter of 2026, the company reached a high of $40.2 billion, a climb of nearly 34% compared to the previous year. Beneath that top-line revenue, the company's net profit rose 77% to a record 706 billion new Taiwan dollars. This was driven by a gross margin of 67.7%, which exceeded the company's own internal projections. High-performance computing, the specific category that includes AI hardware, now generates 66% of TSMC's total revenue. Market dominance at this level is secured through sub-microscopic engineering. TSMC is capturing value by mastering physics at a scale that competitors have yet to reach. Transistor size is measured in nanometers, or nodes. For TSMC, 77% of all wafer revenue is now generated exclusively by chips at the 7-nanometer node or smaller. This breakdown shows each node's financial contribution. The 7-nanometer node provides 11% of revenue, and the 5-nanometer process 33%. The complex 3-nanometer node generates an additional 30%, and on the absolute edge, the 2-nanometer process contributes its first 3%. This constant descent down the nanometer scale is the primary mechanism driving TSMC's control over the next decade of computing. Operating at this scale creates friction that cannot be solved with capital alone. CEO C.C. Wei noted that developing 2-nanometer technology is not a simple transaction, remarking that it isn't like buying milk at a 7-Eleven. A major bottleneck exists in advanced packaging, specifically a process called CoWoS. This stage is so heavily utilized that the lack of capacity is actively limiting how fast TSMC's customers can grow. To address this, TSMC took the rare step of welcoming competitor Intel and their EMIB packaging technology into the ecosystem to meet surging demand. The sheer volume of AI hardware required by the market currently exceeds the manufacturing capacity of any single firm, leading to unprecedented levels of industry cooperation. Scaling production beyond the 2-nanometer node requires a volume of capital expenditure that few other industries can match. TSMC is currently injecting an additional $100 billion into its Arizona operations. This brings the total regional investment to $265 billion, covering 10 fabrication plants and 2 advanced packaging facilities. At the same time, the company is constructing 13 new facilities in Taiwan. The goal is to scale 3-nanometer production to over 200,000 wafers per month by 2028. Despite holding a virtual monopoly on these advanced nodes, and with clients reporting record-high margins, TSMC has explicitly refused to raise its prices 4 or 5 times over. C.C. Wei's philosophy is that TSMC must protect its partners' profitability. They operate on the principle that long-term mutual success is more valuable to the company than maximizing short-term extraction. By trading immediate profit for structural permanence, TSMC is positioning itself as the permanent, irreplaceable foundation of the semiconductor industry.